What's up, guys? This is Tyler, and we're going to be covering the custom ranges today. So right now we just have 2 suggested custom ranges, but I'm going to teach you how to use it. That way you can start looking for your own custom ranges if you'd like. So the first custom range that we're going to go over, well, first let me introduce the tool. So the custom range tool is going to be the Range Trader Pro, and it's going to be paired with the higher time frame trading information. So the higher time frame tool is kind of like your overall, right? You could use the daily, weekly. We've gone over that. The D1 Range Pro is just looking at specific ranges. So this specific range here is from 8:30 to 12. Or excuse me, range time is going to be the 4 to 8:30. It's looking for trades between that time. So right here, it's going to gather all the data between 4 and 8:30. You can see right here, it's New York time, so 5 and then 9:30. So right here, we go to the 1 minute. Now I want to cover this on the replay tool. So we have this range. Now what's the point of this range? Well, most of the time, what we're going to be looking for is a scenario like this. Some form of long in here with the stop here and looking for the opposite side of that range. Now, the data that will kind of help you with that is going to be here. So the range low has been breached. It's letting you know that based on the data, we're only on the 1 minute though, but we have about a 38% chance to run both. Now, again, we could go out to the 15 minute and it'll give us more data, but it happened a little bit too fast there. Let's see if we can get it maybe on the 1 minute. The 3 minute gave us 53 and the 1 minute's giving us 38. So we'll just stick with this one. But we know that really it's about a 50% chance. So we see our setup. We're on the 15 second. Now I want you to see it runs that high. Now what just happened? It also ran that fair value gap. So we could get long there. Stop could go at that fair value gap and we aim for the opposite side. Now we know that this is probably about a 50-50 shot. What we can add is the extensions. So we can see how likely is it to hit our extensions. So we could go a 1 extension and a 1.5 extension. Let's start there. So right here, 1.5 is about 100% chance to hit on the 15 second. Let's see. It's about 67% chance to hit on the 1 minute and about 62 on the 3 minute. So it's definitely likely to hit this level if it does go below the low. So I'm comfortable with my stop being there at the fair value gap, but generally you could also just put it right there at the 1.5. But this is what you would want to do. You'd want to get long there and just look for the opposite side of that range. Boom. So right there you would hit TP. Now, should you hold this trade? My opinion, I'm going to say no. I would exit out of this. And, if anything, leave one runner. If you have the capacity to put multiple lots, right? You can see it runs higher, and then you could see pulls back again, consolidates in that range, and then begins expanding. So it could be worth it to hold a runner, but I would just either take the loss on it or let it run, because I wouldn't want it to pull back and then only take half profit. So that's those would be my rules. If you are going to hold it, that's fine. And then you can still do the same targets. So right here, 1.5. If it runs that range high, same as down here, it was about 100% chance to hit. Now we can just start adding on top of that. Okay, so 2. Now let's do 2.5. So if it's 100% chance to hit here and I'm long, I'd like to target that. 2.5, let's just try 2. Right there, again, 100% chance. So instead of targeting here, I can target here and here because I know that the chance of it getting there is pretty good. And so that's how we want to use that setup. Let's go to like another range and cover that. And again, let me also touch on this before I move on. So we took this range data, but remember, everything is still inside of the higher tool. So yes, right, US 30, when we were long, say in here, stop was down here, we TP'd here, and we look for that 1.5 and 2% extension. Now, what if we know that price is more likely to be bullish and the higher low haven't been tapped yet? Well, we could aim for that previous daily high and see if price will run for it. And that is how we're blending the higher time frame tool with the ranges. So let's go to the next range right here. Now, and these are more difficult, right? Because it doesn't always turn to the other side. And you have to understand where you're at in the higher time frame tool to be able to use the ranges to their maximum efficiency, essentially. So right here, let's go to the replay tool and oops. And let's check it out, that small range. Now I want to check it out with the higher time frame tool on there as well. Let me turn this off for no confusion first. So we trigger the low. We know we have about a 40% to run both. So we have about a 40% chance to run the high. Now, we have about a 60% chance that it doesn't. So in the event, kind of like I've already seen in hindsight, but in the event that it goes bearish, look at this. Low not breached, 67% chance to run the low. And the high doesn't necessarily have the data yet, but it's just it's assumed, right? If it's a 67% chance to run the low, we can solve for the other percent. So we're trading that range. We know the bias is bearish. Now, what would we want to see in a bearish bias? Well, we'd like to see lower highs and lower lows. So this structure being built in, we could start to look for potential bearish moves because we know the target's down here. Now, we know we're not just going to chase, but look, there it is. We have a gap here. Price trades into it. We can begin, if we have that short bias from our data, looking for a setup like this. So you wanted to put it at the order block and then target that low. And again, that would be your first target. Your second target, not too much further, would be here. But then look at your extensions. 67% chance to get to 1.2. So we could look for that data. See, it trades around. It wants to stop us out. Let's just let it play. Boom. And so it starts running. So that one took a while. And that's pretty normal, right? But I want you to understand how we did it and why we did it that way, right? Because we knew that we didn't want to see this break in structure if we were going to continue bearish. And so what did they do? Well, instead of breaking structure, they just consolidated. And then when they were ready, when the time was right here around 11, 12 o'clock, they dump it. And then let's see if we, obviously here we could take off some partials if we were worried about that trade. And then we would see the levels. So it breaks the previous daily low. We've gone to one extension, 70%. Now let's see if we can get to 60. If it pulled back this far, I would have already closed it. But that is how we will be using these ranges. I wanted to look at both sides, an example of where continuations are expected, but I also wanted to show you, what conditions are present when you're not going to see those continuations. So like right here, again, continuation. Let's see, go here. So right here, they break out of that range. It's a 54% chance to run to this low. Now, if we're turning the range off, it is a 64% chance. So what's that? A 36% chance to run the high. Now, that's not a great bias for this in the sense of we would be thinking there's a better chance to run the low. But the way price worked today and with the way the range was, the conditions just weren't right for it. So what should we see? Again, if it's going to go to the previous daily high, let me just put a line there so I could turn it off without all the extra stuff. If it's going to get to this level, what do we want to see? Well, we've already seen this breach here. So we want to see this structure, which has now breached here. We don't want to see it break structure in the opposite direction. So right here, even. And look, we just traded to a fair value gap there. So we'd want to be getting long in here. Say you got long there. I would want to put my stop somewhere there, at least for the first setup. And where would we target? Up here, that previous daily high. So look, see, it never came back to break that structure. It almost never had a chance to. And then you can start looking at all these levels, right? The extensions of your ranged trader. You can say, okay, what's the percentage chance we get to 1.5? About a 67% chance. So I'd be taking at least a partial right in there And then if we're looking at the 2 extension, it's about a 0% chance. So I would be taking partials here for sure. At this point, my stop would need to be at break even because I know that the chances aren't that great. So in the 1 minute, they jumped to 36 because we have more data. But still, I wouldn't be one to take too much risk on that. You can see that would have stopped you out if you were break even. And typically they will do that. You see they run it again and then they go for the high right there. So just some cool little tips and what to expect in here too. And you could see, right, what was the fair value gap it was seeing. It was a 4-hour fair value gap that we tapped into. So right there, we had this 4-hour fair value gap that price was seeing. And it turns around, runs higher. So that's a great setup right there. All right, guys, we're going to be covering some more custom ranges. So the next range that we're going to move on to, so after this range has happened, or if you missed it, we could also look for that 8:30 to 10 o'clock range. So this is another range that can be super helpful to trade. And so right there, you can see the range has now completed. And we want to see where we're at. So we've ran that previous daily high. We're in the extensions now. And we run the high right there. So let's take this down. So we've run the high. What do I not want to see if we're going to be bullish? If we're going to be bullish, I don't want to see them run that structure. If we're going to be bearish, I need to see them break structure. So right there, we broke bullish structure again. That's kind of irrelevant. Could just be seeking highs. Boom. Now we have broken some structure. That makes me want to start being bearish. And it just starts dumping. We could take a retracement. Say we took something like this. This is a very risky trade, but if we just took something like that for some quick returns, we would need to look for, okay, what are some logical targets? Obviously, we just traded this fair value gap. We'd want to see that. And this is our next low. But we could, excuse me, just go in here and wait for price to break down. I was going to see if I could get the half, like the 0.5 on there. So you can see it traded through. We'd have had to take another setup and it probably would have stopped. That's close. It could have played out here if we took the setup again. And it just pulled back up into that heavier structure and then played out. But all right, y'all, that's going to be it for these custom ranges. You know how to use them now. You know how to trade them, and you can change them to really any range you wanted. Say you wanted to do 10 to 1030, right? You could even just start working on that range. And again, the key is, these ranges are helpful, but the key is in the data and using the higher time frame tool. That way you can build in your targets a lot better. And we'll be doing some advanced videos on that because this stuff does get pretty complicated when you start doing it that way. But appreciate you guys being on this call. If you have any questions, feel free to reach out. And these are custom ranges. Peace.